Hi, Anurag, we are good to go.
Yes, we are live now.
Thank you so much, Anurag. Very warm welcome and a good evening to all the participants who've joined us from different parts of the country. I do hope all of you are keeping safe and sound. I take this opportunity to welcome you to the inaugural demo day of AIM ID, which is a virtual series of demo days specifically for the AIM startups. So, AIM has this mandate to become the umbrella body for innovation and entrepreneurship in the country. And while we have introduced a lot of programs to build ecosystems that in turn support startups, we noticed that the two large bottlenecks faced by the startups are largely, how do you get investment and how do you join hands with the large-sized corporates or the MSMEs? Basically, how do you join hands with the solution seekers to the solutions, the high-tech solutions that the startups are providing? And in order to facilitate a smooth transition over two of these speed bumps, we are now introducing the AIM iLeap program. So iLeap, or Innovative Leadership for Entrepreneurial Agility and Profitability. As the name suggests, it has been designed to foster innovation, enable the incubation ecosystem, and act as a growth hack for AIM supported startups. And these AIM supported startups are not only across our incubators, but the ACIC program that we have, the ANIC and the RISE winners that we have, and various other programs are through which we support startups. Like I said, this is a series of virtual demo days, and the inaugural demo day today is focused on fintech. And we'll do this on a repeated basis. Almost every alternate month, we'll be doing a demo day, which will be focused on different sectors like cybersecurity, agri-tech, health tech, artificial intelligence, so on and so forth. And in this journey, we have with us two partners who are going to work with us to support the startup ecosystem, Startup Rizu and Visa. We'll, of course, be talking about them in a little bit more detail as we start our program. The agenda for today is we start with a keynote address and there's a panel discussion, followed by closed door pitches, where curated set of startups from the AIM portfolio shall present to reputed corporates as well as which include some fintech giants, as well as very marquee investors from the ecosystem interested in looking at some fintech startups. So to begin the program today, I have the pleasure and privilege of introducing Mr. Jitendra Gupta, the founder and CEO of Jupiter. Jupiter is a provider of retailer banking services to help users track their expenses. Jitendra has been earlier the CEO and founder of Citrus Pay, a leading digital banks company in India, and he has more than 16 years of work experience in banking and financial services industry, and he is a complete expert when it comes to payments industry. So no better than him, no person better than him to give us the keynote on the demo day focused on fintech startups. So over to you, Jitendra. Glad to have you here, and please do us the honors.
Thanks, Ishita, and thanks, AIM team, for inviting me to this special event. Really pleasure to be here. So, the topic which has been delivered to me is how's the whole customer experience is important in financial services delivery of services. So, if you look at it, like we have come a long way in last 15, 17 years, where, the earlier the problem was related to access services. And now we see with this whole jam Trinity, we've seen at least the access has started going wider in India. And last 4 or 5 years, we have seen where fintechs have started coming in and started providing the better experience of financial services to the people who have now got access. And I think this is this is a very, very standard thing where a user's journey, where first they want to experience the product, like they want to access the service. Once they're used to accessing the service, they want to move up the value chain. which is in terms of how do I get better and better experience, and it's more of an aspirational thing. And in my view, if you look at it in last 3 or 4 years specifically, Indian consumers have started moving into that direction where they're looking for a better experience because they are seeing the products on one side in the commerce side or on the food delivery side or on the other discovery platforms, and where the experience is around search, reviews, ratings, recommendations, and that's how they draw the trust. That's how they sort of get the contextual experience on how exactly they experience the product. And this is where I think which this is the part which is actually in my view has been missing in financial services, where today the financial services are still being provided more on the push based, and there is an inherent trust issue in terms of whether this is the right product for me or whether I got the right recommendation. And I think now we have started seeing where there is a social angle which has been introduced. There is adequate search, there is adequate reviews which are around financial products, and user first research that, and then they start consuming those products. So I'll give you a few examples out of my personal journey in terms of what I have seen in last 10 years of my fintech experience. So my first startup was Citrus Pay, and in that, when I started, one of the major challenge which we saw was not about that the merchants did not have the access to payment gateway, but it was more about they had this problem of that they are getting the consumers to reach to the payments page and they're seeing the drops. And this is where we came into the picture. We introduced the checkout experiences for the consumer, which could drive higher conversion for the merchant. So, like, we brought in few things like where a consumer who's coming repeat, how do you sort of fast forward his transaction by sending his address details or the payment details so in a secured manner, and how does the consumer uses that for the next time purchase and the conversions are higher for the merchant. uh, and similarly, my second stint, which was into the pay later segment, when we saw that like one of the biggest issue in the online side, which we realized that when a consumer is making a purchase, his purchase gets completed when he has made a payment. So effectively, the purchase and payment processes are binded together. And actually, when you're making a payment, because of whatever security thing, you are entering the OTP and then you are coming back to the purchase page. Those are the most anxious moments that my internet should not break or my transaction should go through. And we realized this problem statement by the users. And we actually went ahead and we said that what if we disconnect the purchase and payment itself? And when you say purchase, the purchase is completed and users can pay at convenience whenever they are at ease without the anxious moments. So what I'm trying to highlight is that this is the simplicity of experiences which consumers are really striving for after they've got the basic access or the basic convenience of making payments or the basic access of financial services, that then now their aspiration curve has gone higher in terms of how do I get the best product for me? How do I get the best product at best experience for me? And I think those are the things which customers are striving for. Even in like my current venture where it's into the digital banking segment, like one of the big problem statement which we are seeing from a consumer standpoint is related to service in the banking sector. So where, on the one side you have like Amazon, Swiggy, Zomato, who provide the service real time, instant. They don't differentiate whether you made one order or 100 order, your issues get resolved instantly. While in banking today, if you see, one of the big problem statement is you are being serviced based on your balances, and I think that is a very dichotomy, because even a customer who has a 1 lakh rupee balance and he has an issue around a 1,000 rupee transaction, it matters to him or it matters to her. So from that standpoint, I think there is a need for solving obvious issues which exist in the banking industry as well. And this is where we try taking a stab at it in terms of how do you provide an experience which is more contextualized, which is more personalized in banking. Because today, as a consumer, we see on a day-to-day basis that how we are getting spammed with offers and personal loans and credit cards, even though it may be relevant, not relevant for us. Uh, but uh, but 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 from a consumer's finances standpoint, I think whether that's a right product for the consumer, whether that's a right timing for the product to be consumed by the consumer, rather than getting pushed into the debt traps or the extra credit lines and all of that. I think those are the things which we are trying to solve for. Where how do we make the whole experience personalized, and it is not just about us. I feel that this is the need which today's Indian consumers are expecting, where finances are not being taught in school or in colleges, and for them to get a knowledge about that, how do I make more return on my money, what is the right investment decision for me, what is the whether I should take this loan versus that loan, whether I should take the loan at all. And I think these are the things which Indian consumers are struggling in these decisions, and they end up asking their relatives or friends and all, who may not have the full view on their finances, and those decisions may be very very suboptimal. So from a need standpoint, I personally feel that there is a strong need for consumers to experience a very very personalized experience into the financial services domain. And I think all of that is adding up to the point which I was making, is that the aspiration of getting a seamless experience, a more personalized experience, and the experience which sort of is a world class, rather than what I've seen in last 15 years or 10 years. Because Indian consumers are nowadays looking up to Western world when it comes to the app experience, when it comes to the user experience around buying the products. And that's the for any startup to be successful, I would say that it is no more about just providing the functional product. It is also about how that functional product is being delivered to the consumer in a seamless manner. So that's my submission in terms of the importance of the whole customer experience, be it in the terms of the product delivery or in the service. I think that is very, very important if any fintech startup has to be successful at scale. So, I would personally suggest to all the startups who are hearing this that you got to pay adequate attention to your the experience side, in terms of how your potential customers or users would be experiencing your product, and it is not just about plain functional product. So the importance is very very supreme there. So, so I think I would end my note with this, that ultimately it is not about just the product. The packaging of the product is equally important in fintech domain now. So one got to balance out both. So that's my final submission, Ishita.
Jitendra, that was very insightful. And yes, I think no one could have put it better. It's not just about the functionality, but it is also about the customer experience around the product itself and the customer service. Very well put. Thank you so much. So we have a couple of startups here, fintech startups who are with us on this meeting, and if any one of them has a question or two, we can probably quickly have Jitendra answer the questions. Okay, I don't think we have any questions. I'll request you to put questions in the chat box if any. And now, may I invite Ajay Subramanian to please take forward and moderate the panel discussion now. Over to you.
Sure. Thanks, Ishita. Should we just wait for a couple of minutes to see if there are any questions coming in? Anyone having questions, you can just unmute yourself very quickly, introduce yourself and ask a question to Jiten.
I can ask a question. Hi, Ajay. So Jiten, thank you for such insightful remarks. I mean, really, I thought, without really plunging into such a sector, it's hard to have that level of insight. So wonderful to hear. Uh, so, how did you learn about these discomforts?
So it's very simple. If you ask me, I think for any product, it's just not financial services. For any product, I think you got to see from user's lens that how you as a user are seeing the problem statement on a day-to-day basis when you're experiencing the products. And I think the effectively what I'm saying is the empathy, the user empathy. And I think the more you pay attention to that, the more granular you will get into that. Okay, this makes sense or this does not make sense. And that's the single most important thing.
And so you actually went and hung out with them, interviewed them. What did you do?
What so like I'll give you a real example. So when I started my current venture, which is into digital banking, before starting this venture, we actually went ahead and interviewed 3,500 users. And we had a finite set of things which we wanted to learn about those users. And when we came back to our office and started analyzing those responses, we realized that these are the problem statements. And I'll give you like simple example. So when I asked anyone that are you happy with your bank, nobody told me they're unhappy with their bank. But when I asked the second question, that okay, which bank you would recommend, the answer was how does it matter? All banks are same. So go with the big. That's the so at least your mind would be. Now that is the point which we got into, where when I asked the same user, Uber or Ola, they told me the answer with 5 pointers. When I asked Zomato or Swiggy, they told me the answer with 5 pointers. When I asked Flipkart or Amazon, they told me the answer. So what I'm trying to say, that here there was no brand affinity, but on the other consumer brand, there was a clear brand affinity. And I think that was a real insight which we got from these user interviews, that what and why this brand affinity got created, what are the points which are consumers are liking, and how do we bring in those experiences to banking world and solve for those things. So that's the real insight.
Wow, that's fascinating, because I think 3,500 is not a trivial number to people to speak to. I mean, it reminds me of this very a paper in manufacturing domain where somebody goes to learn from Toyota, and the first day they are asked to go watch an operator on the shop floor and asked to take notes. So your today's training is just that. Next day they come, they're sent to the same operator, say, can you take notes? They take for a whole week, they're just taking notes on the same operator who's doing the same thing. But the notes are getting deeper and deeper and deeper every day. So very fascinating, fascinating. Very good. Thank you for sharing. Yeah.
Thanks.
And I think a lot of those 3,500 people who have been part of this entire building the Jupiter journey, they proudly show off the swags and incentives that Jitin and team keeps shipping to them on Instagram and LinkedIn and whatnot. So who are those, quite a few of those 3,500 as well.
Yeah, so I'll actually, Ajay, I'll share that. So one of the unique insight which we got was that none of our bank ever asked us, is this product relevant for you? So we said, wow, there is this unique insight that if you have to win the trust of the consumer, why not make them part of the building banking experience? So we created this unique concept called, let's co-create the banking experience, which is sort of relevant for you. So we created a community, online community, where we have now 10,000 odd members. They actually put out the feature. We have put out a product roadmap publicly, and they comment on the product roadmap that in this product, I would like to have XYZ. And this is what I don't like about my current bank. And this is what I like about my current bank. And we sort of, our product team takes inspiration from there and then start building the product. And that is a real time insights which we're getting, which is so invaluable.
I guess, Jitendra definitely knows a thing or two of about fintech, and I think that's why it was a good opportunity for the startups who are here to probably ask a couple of questions. But I guess that's a part and parcel of the game. People are shy putting their questions out when the person is there. फिर बाद में पूछेंगे यार मुझे ये पूछना था तुमसे. But anyways, I think we can just probably then move on to the next segment, Ishita. We do that.
Thanks,
Yes,
Ajay.
absolutely.
Okay. Thanks. Thank you so much, Jiten, for taking this time and sharing your perspectives. Thank you.
Sure. Bye.
Bye. So great. So we have with us Dr. Chintan Vaishnav. We also have Lindsay Theratil, who's from Barclays, and she manages open innovation at for RISE. And we have Pramod Mulani from Visa, Visa being the original fintech boys. And it's great to have Barclays and RISE on this panel for a simple reason that, like I said, Visa being the original fintech boys of probably last 5 decades or more, and Barclays probably one of the earliest adopters in terms of setting up a fintech accelerator and creating a platform through RISE across different locations globally and enabling the next gen fintechs to not only get the kind of insights but also domain expertise and bunch of other things. So great. I think we'll just keep it very quick and very straightforward. A handful of questions to try and bring out different perspectives. And I'll go first with Dr. Chintan, who's freshly minted on the Atal Innovation Program and Niti Aayog, but brings like really solid background. And probably the reason I want to go to you, Dr. Chintan, is for the simple reason that probably gone are the days when corporates would create those endowment funds or trusts, and that was the way in which corporates were engaging with whether it is academia, whether it is engaging with research. But now when we talk of innovation, and yes, research continues to be a very strong part of innovation across different industries. But at the same time, this new beast that a lot of corporates want to tame, the startups or emerging technologies or the unknown out there. I think the overall landscape as such, when it comes to this entire piece of innovation, has been constantly changing. But you have seen it probably over the past decade, couple of decades, across global kind of markets. When do you think actually the opportunity is appropriate for even thinking of collaborating, whether it is with incubators, whether it is with startups, and what is that mindset shift where it's the right time for a corporate or an enterprise to start engaging on that front? How has it changed over the years according to you?
Okay. So, well, thank you for, first of all, for Startup Reserve, Visa, and partners for putting together this wonderful partnership. So, to your question about when should an enterprise think about a startup, right? I feel so. This question is this is a very hard question actually. In fact, I feel the larger you are, the harder this question is. Life as a large company seems much harder than life as a startup because you have much more at stake in a way, and you have a tremendous momentum, right? Going, you have all these top end customers to please, while you have to worry about something that can completely topple you from a very different angle and all of that. So I think this is a very, in a way, very, very tricky question. I think a simple answer, which may seem a bit facetious, is that they should think about startups all the time. But I don't mean for it to be facetious at all because of the following reason. So, for instance, there are two places where, I mean, a very simple catechism, let me offer. Many enterprises, they seem to have a very narrow view of a startup. So the narrow view can be that if it improves my top line, that is by clubbing this startup with me, I can sell better. or if it improves my cost structure because this startup helps me do things in a more cost-effective way, certain part of my business, and I will thereby my profitability will be better. And so I will go to these startups, right? That's one very narrow view of it. This is a view where there is an assumption. The assumption behind this view is that the total pie is the same. I just want a little larger slice of that pie. That's the argument here, right? Now, but I think the real opportunity with startups, I feel, for large companies is in niches which currently don't seem very threatening, but can become quite threatening quite soon. And if you don't engage with it early enough, then it's too late to engage. And there, I think startups have a natural advantage because they don't have to deal with the legacy. So I think if I were a large company, and many large companies do this, so this is not an epiphany of a sort, but if I were a large company, I would always keep a scan on startups, and really engage with them all the time because it may be too late before I begin to engage on a trend that begins to pick up. That's mine.
Great. Thank you. Thank you so much for that. I'll go to Lindsay with the same question. And like I said, I mean, Barclays is more than 300 years old as an organization, as a financial service company, financial institution, and Rise has probably been around for about 8 or 9 years now. But I'm sure that even prior to that, there were different kind of models to which Barclays was engaging with startups and innovation. How have you seen, probably if you were to take the last decade and with Rise kind of expanding to multiple geographies in this time frame, how have you seen the innovation perspective change from the lens of Barclays, and has the relevance kind of shifted? Yes, startups like Dr. Chintan mentioned, startups have been something that corporates have been wary of and keeping their eyes and ears open at all times. But creating a very distinct property like Rise to engage with startups is what is the right time for Barclays to engage with startups?
So, thanks for that question, and thanks to all the previous speakers who have talked very nicely and great things about fintech. I think there is a great opportunity there, and we as Barclays have definitely recognized that much early. In fact, we were one of the first ones to set up a complete ecosystem around that. If I have to talk about not just how Barclays responds to the fintech ecosystem, but in general, large institutions, I think Dr. Chintan, you were absolutely right when you said that as you become larger, that question is really that much more difficult, right? So yes, this is definitely a difficult question. So I think the way most of these large institutions, first it was completely disregard, ignore. Not many paid attention to the fintech. Fintech were always there. It's not that, just 10 years back, they just erupted in the scene. They were always there, but they were always in the background, providing services, providing a lot of fintech solutions to the banks, right? But it's just in the last 10 years that they have now the computing power, and instead of playing the intermediary role, because of the access to information that they have and all the great talent that they have access to, they have now come in the forefront, right? So first it was a complete stage of disregard. Okay, they are there. Slowly it erupted into competition. Then banks started thinking, okay, these are competition, they are going to eat into our revenues. But slowly, as fintech started exploring the path, and financial institutions also started looking at the different offerings that fintechs are there, the realization that collaboration is the best approach did dawn on many people, right? So while a lot of these corporate innovation programs set up with the objective of working with fintechs or startups, it was always about exploring and experimenting, right? So most of the initial engagements were all POCs and pilots, which were never getting converted into full-scale implementations. So some of them was more from a PR lens, and some of them was from a little more serious effort to look at fintech space, understand what they have to offer. I think the last 5 years have been very instrumental in that regard, wherein now there is more serious focus on working with fintechs, be it in the capacity of partnering, co-creating. I think Jiten talked about co-creating with customers. We as large banks think that it is important for us to co-create the solution with fintechs as well as the customers, right? So for us, it's a three-way partnership that is very important. So that's what has slowly started. The whole partnership at India has started. Then there are investments that we are making, acquiring companies, because while there is a lot of focus on organic growth and organic innovation, we do realize that it is important to partner and also acquire the right set of capabilities so that we are ahead in our innovation journey. I think there are just so many examples that I think Jiten outlined about all the other services and the kind of distinguishing factors that they have in terms of the customer experience that they provide. And everybody at the end of the day expects the same from the banks as well. So if we have to accelerate our journey, it is very important for us to partner with fintechs, innovative fintechs who have tried, tested, done so much market research, have come up with the right solution. So let's join hands. I think from the fintech's perspective, they have brilliant solution, but where they lack sometimes is the sophistication in terms of regulatory reporting, the compliance, most importantly, the trust factor. With customers, I think that was one of the feedback that was there, right? Let's go with the biggest bank because there is a trust factor. So yes, trust factor is important. So all this comes with a bank. So collaborating together from a fintech perspective helps them to scale faster, scale better. And from a bank's perspective, it is about getting into newer areas that we were earlier not able to service. So there is a large unbanked and underbanked segment. Fintechs are making it possible for us to service that segment, right? So it is, I think, a win-win situation if we collaborate together. And there are several areas, both the existing areas where maybe we have not gone deeper earlier, and it is possible to go deeper with fintech engagements. And there are other areas that we have not yet entered, and it could be that we can start entering those areas with fintech partnerships. So I think there are multiple opportunities to partner, and it's only now becoming clearer what those opportunities are. And also there is now a lot more serious efforts to make that happen.
Great. Thanks. Thank you, Lindsay, for that. I mean, Pramod, what is this thing of fintech being a decade old? Isn't it like going back to 1958 when Visa started? That's the poster child of fintech. But yeah, I mean, keeping aside, I mean, jokes apart, I guess apart from the different API ecosystem that Visa has put out, or probably the Visa Everywhere initiatives, there are tons of stuff that Visa does on the fintech front. But from your perspective, I mean, if you were to look at it, when does and I mean, a lot of startup, whether I mean, from different aspects, would want to collaborate with Visa, but when do you think that form of an enterprise collaboration actually makes sense for a Visa to engage with fintechs who want to work with you?
Actually, there were some very interesting points made by both the panelists earlier, Doctor and Lindsay. I heard what is obviously very, very important, Ajay, and the large group of fintechs over here, is that customers have become very, very demanding and very, very smart, right? In the last 10 years, thanks to the penetration of mobile, internet, we have same access to information that, and devices that someone in a different part of the world would have, because all of us are used to the same device, same experience, same apps, everything remains the same, right? So it's a very hyper connected world. So customers have become very, very demanding. So it's if big organizations want to compete and challenge the world, grow, create value for customers, it can't be the same business model that they followed a few years back or maybe a few decades back. I can give you a very good example. When Apple launched their iPhone, till that era, you had to charge your phone when you unboxed it and wait for a few hours before you could use your phone. The way Apple disrupted that was said that the phones came pre-charged, so you could just pick up the phone from the device box and start using it. Now, for that to happen, everything else had to change, right? Right from saying what kind of packaging had to be there, you had to remove the plastic. I don't know if you realize that Apple's even wrapper is so hypersensitive to a touch that you can just peel it off. So it's built around the value that Apple wanted to create for customers. And then obviously, because the business model was all about value creation, people are ready to pay a premium for it. So that's the philosophy with which Apple operates, right? I guess if you want to create value for customers, be different from competition and survive in the world today, we will have to engage with this ecosystem of fintech startups as part of the value that we want to create for our customer, because enterprises realize that they can't do everything on their own, so they'll have to partner with these fintechs. So I would agree with what was the first comment that Doc made, was that it's no more a choice, it's a necessary thing that you will have to do. It is critical to map out what kind of partnerships you need on day one, what kind of partnerships you might need day 60 later, and then start putting that a partnership framework together. So I don't think it's now there is any timing to it. It's all about how you map your customer journeys, the value that you want to create for your customers, and then start mapping which are the partners you need for doing that.
Great. Thanks for that, Rohan. And I think from where Jiten started with the keynote and the flow that has been, I think the question and the way all three of you have kind of put your comments out there. I guess the innovation imperative or why this entire piece of where startups lie or their relevance, I think it's very straightforward. But that brings us to the next question, which is the broader crux of this program with the Atal Innovation Mission and iLeap, where we are bringing together about 67 odd incubators that are funded under the program, and every couple of months identifying a particular theme under which we are selecting a handful of startups through an application-based process and conducting a demo day, providing them exposure to mentors, domain experts, whatnot, and concluding with a demo day like the one that we are here at today. So it's very obvious that partnerships are the key to growth. But having said that, when startups are a part of incubators or accelerators or such structured programs, in that context, how would you define, and I'll go to Doc with this question first, how would you define the role of enterprise and enterprise engagement with an apex body like what Atal Innovation Mission is, or probably iLeap as a program is, or probably at the incubator level? How do you kind of see those partnerships getting structured, and what is the win-win scenario that can be put out?
Okay. So can I break down your question as follows? Why iLeap-like programs? Why an enterprise? Why should somebody go to an enterprise, right? When they are already at an incubator or an accelerator. So I think, well, first of all, these demo days are really, let me say something else before. The evolution of an ecosystem, just like the evolution of an industrial evolution, goes from general to specific. So as you see that there's a fintech accelerator, an agri-tech accelerator, a health tech accelerator, that is a proxy for an ecosystem maturing. That's the first thought, overarching thought. And a mature ecosystem needs programs of different length or cyclicity, if you would. So, we have several programs that are like, once you're in that program, you're in it for a whole year or 2 years or whatever, and if you think about deep tech, they may even need to be longer. But this shorter cycle demo days is a wonderful addition, because you can, as you see activities in the market, you can react to it and bring people together around it, so that this matchmaking can happen in some ways for within the ecosystem players. So that really is what's most exciting about an iLeap-like offering. It's customizability and its lightweight nature to serve the ecosystem as it evolves. That's one thought here. Now, when would a startup want to go to an enterprise? I think you're raising at the deepest level, you are raising a question of the theory of the firm. And the theory of the firm is that the firm's advantage is a function of its resources. So a startup would go to an enterprise for their resources, for their customers, for their sophistication, for their regulatory ability to deal with regulation, etc., etc. So it's much better for a startup to work with an enterprise to cut that learning curve rather than to learn all of that on their own. So when something, in my mind, when something reaches a TRL 4 to TRL technology readiness level 4 to technology readiness level 6, this is when you've demonstrated something at a lab level with few customers or at a field level with few more customers, and you are ready to go to a much larger number. It's much better to go with an enterprise, unless you are imagining yourself to be the disruptor of that enterprise in the first place. Then obviously you wouldn't want to go there, right? So for an iLeap-like program, but at the same time, I think what happens, having done a startup, startups are generally nervous about graduating to an enterprise, because an enterprise is so much larger than a startup that you may feel that, are you going to get a fair deal? That's the nervousness, right? And an iLeap-like program with, with the government partnering with private sector actors, it reduces the transaction cost of this matchmaking. That's at the highest level, that's what's happening here in some ways, in my mind. So back to you.
Okay. So Lindsay, I'll come to you with the same one, but bringing the other perspective, which is obviously the enterprise side of it. Now, yes, a lot of whether or not Barclays has business in India is secondary, but Barclays being the behemoth it is in the global kind of a scenario when it comes to banking and financial services, there are a lot of companies which may want to work with you. Keeping aside funding, whether Barclays becomes a customer or not, what are the things that, of course, I know a few things that I have learned from startups over the years who have engaged with Barclays, but what are the things that are most common that you come across, which are learnings for them or wins or takeaways for them when they engage with Barclays, whether or not through RISE?
I think our intention, or I think all financial institutions, when they engage with fintechs, the intention is definitely to partner and co-create a solution together. However, there are some roadblocks when it comes to actual adoption of these solutions, and that's why a lot of POCs and pilots sometimes do not reach that full-scale implementation stage. Mostly, where I see the challenge is one is most fintechs are not corporate ready, right? If they're looking for partnerships with corporates, they do have to be corporate ready with respect to the level of data privacy practices that they have, or cybersecurity practices that they have, the way the data is stored, where it is stored. So a lot of those kind of elements. The other important element is dependence on cloud versus on-prem. So most financial institutions would be looking at on-prem solution where they have more control over what happens on the data, whereas most fintechs are mostly cloud-based solutions, right? So that's the other challenge. But I also see that a lot of fintechs are now going to more hybrid models where they do provide on-prem and cloud solutions as well. So that is also definitely happening. But other than that, I think the solution itself, most of the times, because financial institutions have a lot of legacy to deal with, the other big challenge is how do they integrate the fintech solution to the existing solutions. the banking as a service is definitely a good model which helps to overcome some of those challenges. The intermediary bank as a service layer does help to overcome some of those challenges. So neobanks are becoming important from that perspective. But I think these are just few challenges that are already there, and fintechs have learned it the hard way that these are the challenges. Financial institutions are also understanding that these are the challenges, and we, for example, Barclays has signed up Fintech Pledge, which is our way of, we've committed to the UK government that we will work with fintechs globally, not just in UK, but globally, and we will enable that. So we have set up a clear-cut onboarding platform where there is more and more information given to fintechs on how to be bank ready, right? So those are the things that we are at least trying to remove some of those roadblocks which come in effective partnerships.
Okay. And Pramod, if I were to break this into two parts, partnerships with startups directly and partnerships with incubators and accelerators, which become a funnel for fintechs or technology companies that are relevant to the broader Visa ecosystem. What are the things that you would see in both of them as tangible takeaways or success metrics?
So, yeah, I think these are fantastic initiatives, right? Incubators and accelerator programs. What is being achieved through these, platforms is that fintechs are being groomed much faster to get their products out in the market. As Doc called out, right? I mean, and I heard Lindsay also speak about it. They're not market ready, they're not compliance ready, they're not, data privacy ready, so on and so forth, right? In all these platforms, incubators and accelerators, when corporates come in, they're actually kind of teaching them what are the ways of get to market faster. I think that's exactly what's happening. There is faster transformation of learning and experiences and the mistakes that have got done so that these startups and fintechs don't go through the same journey. So if for example, a corporate knew what is the way of getting a particular compliance done in the right way, how could you transform that knowledge to the fintech so that or the startup so that they can get to market faster by following the right process? I think these platforms play a very, very critical and important role. Otherwise, for example, for Visa to reach out to 2000 fintechs, start grooming them is not going to be easy. But to partner with incubators and accelerators, throw challenges at them, help them solve those problems, groom them. I think these are perfect platforms for, especially Visa. I can talk about are perfect platforms so that we can groom these startups and fintechs so that they can take on the larger world and solve for the problems that they intend to solve for.
Great. Okay, because I have a add-on question to that, but I'll come to you with the third question on that, which becomes a good segue into it. So Lindsay, I mean, with Rise being around for what just over 5 years as far as India is concerned, and some of the other geographies for a bit longer than that, coming to India and the experience with fintechs, I mean, how have you seen the fintech landscape kind of change? And in terms of the innovation that is being brought out by Indian fintechs, how has this evolution been in your experience?
Mr. Anirudh,
Lindsay?
I think Jitendra talked about this right at the start, right? Customer experience, definitely. There is a lot that's being done. There, with the Jandan account, almost 80% people had a bank account, right? But there was also a follow-up study from World Bank which showed that 50% of those people don't use the account. So access is not same as use, right? People are not actually using those services. So it needs to be brought to their doorsteps or on their mobile and made it very, very user-friendly and very intuitive for people to use. So financial literacy has to go along with a lot of the solutions that are being offered, right? So I think the fintechs play a very important role in making that happen. So I don't really think the some of these fintechs are a big threat to banks, primarily because they are serving those segments, the underbanked and unbanked segments, which were not getting served, right? So if if fintechs are coming into the space, they're coming into the micro services, right? Micro financial offerings, be it the micro lending, micro payments, micro investments, micro insurance. So these are the segments that didn't even exist. So I think fintechs played a major role in India getting into this completely new territory, serving customers who were not being served earlier, and coming up with solutions which are so user friendly, simple, and intuitive to use. Right? It is on your smartphone. You just download an application, fill in few details, completely digital. The fact that government has enabled the digital stack makes it a lot more easier to make those solutions happen. So everything is linked. So it is. I think the transformation has happened in this particular area, and future also lies. If we talk about things beyond the micro investment, I think the other big area is the banking as a service or the neobank offerings. That's very important, and it's a good solution as well, right? So a lot of Indian banks think that it is good to, because then they are able to of their customers, not just the banking need, but the other aspect as well, right? So it is really helping to them for Indian banks to become the real advisors to customers, which is what they've always envisioned and wanted to be, right? So I think those are the things where and fintechs are playing a big role there.
Sure. I think we have a question from Divakar, who's in the audience. So Divakar, just hold on, because I'll finish with the questions with Pramod and Dr. Chintan as well, and then we can have you kind of unmute yourself and just ask the question out aloud. So Pramod, I mean, Visa has been very active as far as engaging with startups and fintechs go India globally. How have you seen a lot of this innovation change over the years from a Visa lens, and probably even Visa partners and customers lens, which has kind of allowed you to partner with more fintechs and bring them into the broader Visa ecosystem?
Yeah, Ajay, I think there is full recognition at Visa that fintechs and startups have to play a very, very important role in the growth at Visa. And India being the big hub of fintechs, and Visa believes that India is a very, very important and critical market for payments and generally banking as such. So we believe that fintechs are an important ecosystem partner. What we've done over the last 18-24 months is that opened up a lot of Visa to work with these fintechs, because banks operate in a certain way and fintechs operate in a very different way. Banks have so many products to sell to their consumers, so they operate in a very different way. Fintechs pick up one product and one problem and want to do it very, very well. So both of them are different behaviors and want to operate in a very, very different way. So what we've done, as I spoke in the last 18-24 months, is opened up a lot of Visa to these fintechs, right from APIs that I spoke about. We've launched some of our programs in India. One of them is Visa Ready. So we were hearing some of the challenges as to how do we groom these fintechs into being bank ready solutions. So Visa Ready is a solution in that direction. Or traditionally, for example, Visa was always partnering with banks. We've changed a lot of our licensing processes to work with fintechs. So it's like Visa has transformed itself completely in the last 18-24 months to be very, very, fintech friendly, design programs, products, which are specifically targeted at fintechs and startups.
And some of the current programs that Visa currently is running, you want to name some?
So for example, I spoke about Visa Ready. We recently did something called Visa Connect. What Visa Connect does is, one gets the solution to be bank grade and Visa grade. And that's a complete grooming process for fintechs in India, so that we can, get their solutions to be bank grade solutions. And then we also give them global access. So what we also do is we tell them, hey, if you believe you want to go to a global market, we will help you get there, because Visa is a global company and that's a big strength that we get on the table. So how can we take fintechs in India to the global market? So Visa Connect is another program. Then we have Visa Developer APIs, and we also have Visa FinTech Fast Track. So different programs targeted at different use cases and products of fintechs. but we've kind of mapped out what works in India and accordingly designed those products and programs.
And all of these programs are kind of green funnel programs, right? I mean, companies can apply it at any given point in time.
Any given point in time.
Cool. So to wrap up this conversation, I'll come to you, Dr. Chintan, and fintech and non-fintech, purely from a Atal Innovation Mission perspective, and the 60 odd incubators that are there in the fold and close to 2,000 odd startups. What are the top three areas, if we were to, where startups can bring innovation and accelerated growth to industry at large?
Hard question. My frame of mind is still a bit of a COVID frame of mind. And so my answer may be influenced by it. There are two ways to look at this, the answer to this, right? One is, what is most ripe in terms of the opportunity and accelerated growth, right? I think fintech is definitely one of them. Probably still software as a service is still one of the major ones. A variety of online marketplace that begins to speak to COVID, post-COVID era is another one where one would see an accelerated growth if you were a startup. If I were to look a little further and say, okay, what is the kind of world we are going to live in? And therefore, what kind of startups would also be needed? Then I think what COVID has done is it really pushed us back to basics, and it has told us that you better fix your healthcare, education, and livelihood. And if you don't fix these three, then you can't build very tall buildings on top of it. So I think those would also see, I would imagine, a whole bunch of attention, because I think this is a common experience we as a world have gone through. And I think it has influenced the minds of the investors as much as anybody else's minds. So that would be my thought.
Absolutely. I mean, behavior has changed in a massive way, and because of which a lot of investment thesis also, and the kind of companies that you're seeing gaining traction globally have been very different than probably one would have seen maybe 18 months prior or before.
But you're asking a research question, so I can only offer you hypotheses.
No, thank you so much, but it's very time relevant, so it's all good. So we have a question here from Divakar Shukla. I'm just going to read it out. It says that, and this is around startup corporate partnership, that most of the times when we reach out to corporates for partnerships, it comes out as a chicken and egg situation. They want more traction, and as a startup, to boost our traction, we need more services. So I have my comments on it, but I'll go to Pramod and Lindsay first. Pramod, do you want to take a stab at that?
Yeah, thanks, Ajay. So what we've been doing, Ajay, is Visa follows a principle of if I have to speak about innovation, there is collaboration, ideation, implementation, and scale up, right? Collaboration is all about partnerships and all, and ideation is about co-creating products. I think this fits the right box of ideation, where with the fintech, we can co-create a product. Now, it's not about scaling up. It might just be a proof of concept, which might just get killed, and it might just be a few hundred transactions or few single-digit transactions. And by the way, we are actually, working with many fintechs in co-creating products like those. So this is something very, very interesting because it falls under the bucket of ideation for us. And we don't kind of wait for the full scale product to come. So if there are any use cases that have been spoken about which are of interest to payments as such and financial services as such, we are open to partner to co-create products with fintechs.
Lindsay, I'm sure that a lot of things have changed in the last 5-6 years as far as corporate startup partnerships go, but your thoughts on the question?
I think the whole incubator and accelerator program that has been set up with this exact problem statement, right? Because as a financial institution or large corporates, it is difficult to work with very early stage startups. So the best way to do that is via these incubators and accelerator, where we work with them and co-create the solution, help them to get the solution in such a way that it is corporate ready, or at least it is bank ready, right? For us. So I think that's a good effective pipeline that we have built to work with startups who are very early. And if it's not as part of incubator and accelerator, yes, we do work with startups who are slightly more mature because of the onboarding practices that are there with any large corporates, right? So incubators and accelerators is where most fintechs get their first customer. And that is definitely the route that should be focused on for such cases.
Cool. Thank you for that, Lindsay. Any other questions before I hand it over back to Ishita so that the rock stars of the day, the startups can be on stage presenting? Any questions? You can either unmute yourself and ask it aloud, or you can just put it out in the chat window and I'll read it out for you. Yeah, doesn't seem to be any. So I'll just wrap up. Yes, please.
May I say a word just
Yes.
to tell Pramod and Lindsay that I think what you spoke about was very impressive as to how agile your firms are despite being so large to this fintech ecosystem. So I was very educational. Thank you for sharing your thoughts. Back to you, Ajay.
Thank you for the comments. Yeah, so thank you so much, Dr. Chintan, Lindsay, and Pramod for taking time and addressing the audience. Thank you so much for your time. So Ishita, handing it over back to you.
Sure. Thank you, Ajay, Lindsay, Pramod, Dr. Chintan. We had a very insightful discussion. None of the startups are asking questions because they are mentally preparing for the pitches that they have to give in the immediately after this short 5-minute break that we'll take. I would request the investors, enterprises, and the startups to just stay online. We'll start the pitches in about 3 to 4 minutes. We're just taking a short break to set things up. And after that, I'll invite my colleague Anurag to start the next session, which is the closed door pitches. Thank you so much for being here. Thank you.
Thank you.
Thank you.
Thank you.